Hi, my name is Mark Bernard. I'm a monetary economist. In this video, I want to talk about the Russian ruble and what's happening to it in terms of the decline of the ruble, the collapse of the ruble, how this relates to the future, and what its prospects are for the future. What is the prospects of the Russian ruble as a currency? You got to remember, the Russians have already revalued their currency. They did it in 1924, I believe, right after the revolution. They did it again 1947. They did it again, 1961. They did it again, 1993. They did it again, 1998. And that was like 1,000 to 1. They revalue their currency. Is the Russian ruble going to be revalued? What do we know about it? I'm going to look at it again from a technical standpoint. You've got all these Harvard professors, etc., building elaborate models. They're not as effective as what I call the Stan Weinstein approach, the simple moving average, looking at the 200-day, the 50-day, and looking at the relationship to the price of the asset, and in this case, the Russian ruble. And we know that in stage analysis, stage 1 is the flat, stage 2 is the going up, it's broken out above the 200-day moving average, and stage 3 is when you have a plateau. Stage 4 is the decline, where the asset price is below the moving average. In this case, we have a death cross, which the 50-day moving average is below the 200-day moving average, as well as the price. That's a huge confirmation. Anybody thinks the ruble is going to recover, or there's going to be some snap, great, happening or uptrend of the ruble, consider this. These stages are chronologically sequential. They go stage 1, 2, 3, 4. Assets don't go from stage 4 and then hop back to stage 2 and go up. That's usually called a dead cat bounce, or it's called a sucker's rally. You don't want to get in on that. The broader the base, the higher the pyramid. So when we're talking about stage analysis with technical analysis with currencies or any assets like stock, if you've got a very long base formation, if the base has taken many years, and then it starts to break out above the 200-day moving average, and then you have confirmation, whatever come from other alternatives, let's say volume signals you're looking at, then that is indication that that's a breakout. But if you have a collapse, a stage 4 collapse, especially a death cross like Stan Weinstein calls it, and a simple moving average, the 200-day and then the 50-day crosses out in the asset price, and you have a little bit of recovery, that's not a stage 2. That's not even a stage 1. I would expect, look at the length of the stage 4 decline, and then you can calculate some ratio of how many months that is going to be in stage 1 before we even have any hope, and it's negative hope, of it breaking out. So that's the stage analysis. This is now trying to find support, probably at 90. It hit a new low of 0.0088, and now it's at 0.009394, and probably resistance at 0.0095. So we're going to have a resistance band between support and resistance between 0.009 and 0.0095. Remember, a lot of this is what Keynes called animal spirits, or the psychology of the market. People look for these whole-ish numbers like, 90 or 95, in this case, 0.0095. So maybe the ruble is going to trade in that band for a while if it creates any sort of plateau formation, any kind of base. And it would have to take a long base before it recovered. But I've never seen a ruble recover. Every single time they revalue your currency, if they were to revalue it, whatever, 1,000 to 1 or whatever, and match it to the dollar today, what do you think is going to happen over the next couple of years? It's just going to devalue. So what's the point? And a lot of people, they're now like fleeing. I believe in these alternative currencies in the sense, that's what we had essentially during the classical gold standards. Private companies, railroad companies, a bank issued their own currency backed by gold. But this is not the scenario we see playing out in Russia. Now let's consider something else, the geopolitical events. Again, the tape tells all. Always look at the trend. Don't listen to the news. Because as humans, that I've mentioned this, we're always forward-looking. Our expectations are always about the future, and the price is really an intertemporal price. That means today and an expectation of the future. So when you consider that it's an intertemporal information point, the future is embedded into the price. And, as people say, it's the greatest weighing machine in the world. So if it's in a decline, maybe it'll hit a plateau and hit support and resistance and bounce around there. But I wouldn't be, saying, okay, this is the recovery or anything. The reason it hasn't gone into complete free fall is the Russian central bank did say do some interventions. And we can make that analogous to the Russian stock markets, the MOEX. Why hasn't that totally collapsed? Let me put it this way. All the people I know in the West that invested in Russian stocks and Russian indexes and ETFs, they all lost their money. Zero. They got nothing back. The only reason that is even slightly looks like it's sustained, it's all capital controls, all an internal economy, all fabrication, no transparency. And so with the ruble, don't expect to see any kind of recovery, even if they intervene to try to prop it up against the support and create some facade. What's really going on is it's a collapse behind the scenes, and it's an indication that hyperinflation has already kicked in. I'm a monetary economist. I study this my whole life. I know what I'm talking about in this regard. There is no way that you're going to see any substantial recovery from this. It broke the 0.001 psychological barrier, okay? It broke this penny barrier, 0.1. Okay, you get the point. The support level, and it's already hit a new low. It bounced off that, and now maybe you'll find a trading range. Let's look at what geopolitical events could fuel this. Okay, so we know, and again, the geopolitical news is like 6 months late when it's already in the price. We know the president of Ukraine has said no land for peace per se. Okay, he's saying very different. He's saying NATO umbrella. Okay, and then the rest will be returned and there is no way that ruble is going to recover. There's only one chance, and we're going to see, what the orange man is made of. He thinks he's going to negotiate with a guy like the Tsar of Russia. That's a dangerous game he's playing. He thinks he's, this American smile and everything like that. He's just going to be able to. Russians are something different. It's a different world, and you have to understand it if you ever lived in Eastern Europe and gone to Russia. It's a different total mentality. So if the orange man really is, let's say, a clone, like, was it not Boba Fett, but Jango Fett, I believe, in the Clone Wars, they made zillions of clones of him, just like they made, if he's really a clone of Viktor Orban, but actually in Star Wars, that guy was a lot smarter. Maybe he's more like, Jabba the Hutt or something. That is not good news. And that would mean he might ease sanctions, lift a little bit of sanctions. That will be the acid test to see what he's really made out of. But if he doesn't, and he holds fast in the sanctions are more important. Don't you guys understand? The economics of this is more important in some sense than the weaponry. Okay? I don't want to say it, but that's kind of true. You can hold your ground. You can have partisans. You can do whatever. But if the economics goes down, and it's on the margin. Economics is a marginal science. Okay? It's a marginal science. If it's on the margin already, if you're already strapped for cash, you can't raise debt, okay? And the currency is going down. Prices are going up. And I'm not talking about the government as a whole. I'm talking from a microeconomic agent, a person. You can't pay those bills, and you can spin any scenario like you want. Oh, we're okay here. And, maybe your grandparents were survivors, but I don't think this Gen Z in Russia and everybody is going to take it because they already have this channel of information, the information superhighway. They already know ways around it. They're already putting their currencies, capital somewhere else, and they're not going to take this. The country as a whole is going to go bankrupt, and the individuals are going to go bankrupt. And again, it's the return of Candyland. I was there in the 90s. I saw what was going on. And if you're a Western consumer going off with, American smiling cargo shorts and wads of American dollars, everything's for the taking, right? You could buy things, trade things, do anything you want. But for Russians, it's not good times. So my prediction, if I'm a prognosticator, and I don't believe in economic prognosticators, but I've been studying this economic science of monetary theory my whole life, the theory, Knut Wicksell, Hayek, Mises, Karl Menger, Bombovik. I've studied this, and I know it like the back of my hand. This is a classic case of a currency breakdown based on the moving averages, the trend analysis, any way you want to slice it. Until you can show me empirical evidence that a base is forming, remember, the wider the base, the higher the pyramid, just expect the trend to continue. Expect if people are walking one way, the trend is similar in a stock or an asset. It will continue to go that way. If you have any questions about why at all this would recover, it's only about the sanctions. Sanctions tighten as the noose tightens. Very little hope for the Russian economy. It's going down. All Ukraine has to do is hold strong. My name is Mark Bernab, a monetary economist. Have a great day. Thank you very much.